Welcome back, fellow Valley investors. In this video, I'm going to be covering ZIM, which is an ocean freight company that moves freight around the world from Asia to Europe, Europe to Asia, Asia to the United States, South America, all over the world. ZIM is a part of it. This company saw its revenue really peak in the 2021, 2022 years. And the reason for it was there was big supply chain issues that were caused by COVID, and as a result, shipping rates really went up high. And therefore, ZIM was collecting really high premiums on shipping containers from one place to another. That created just great profitability, great cash flow, and the stock price for ZIM just went off the charts. Now shipping rates have fallen, and so has the stock price for ZIM. ZIM has become a shorted stock. I believe there's about 29% of shares are being shorted, which is a high amount. And I've been an investor in ZIM because I believe the company is going to be a good long-term company. Shipping rates, I believe, will go up. They're not going to go up anywhere near the level that they were at 2021, 2022. That was a 1 in 100 years event, that pandemic. But I believe shipping rates will continue to rise modestly. The good news about ZIM is they used all that money that they made for two things. One, they paid huge dividends. If you were a ZIM stockholder, you pretty much were given back your investment in the form of dividends, which was incredible if you study their dividend history. The other thing they did is they modernized their fleet. So they bought ships that are more efficient and they burn less fuel, are less costly to operate. So competitively going forward, ZIM is going to be in a good spot. The company announced their earnings today. It's March 13th, 2024, for the full year of 2023. I'm going to take a look at those financials and update my analysis on the company and make a decision on the stock, whether I should buy more shares, just hold my shares, or sell my shares in ZIM. Looking at the fundamentals for ZIM, ZIM is a $1.4 billion company, and its revenues are $6 billion as of the trailing 12 months. And I think that's going to be closer to $5 billion. It's still, you're buying a company for a fraction of their revenue. The company historically has paid just really high dividends because they had just a glut of cash come in during the 2021, 2022 years. Most analysts are not sure what to do with this stock, their holders, and the stock is being shorted. 29% of shares are being shorted. If you look at the stock price for the company, and it really doesn't show the complete picture, it was actually higher. The stock price was trading at around $24, and it's now, as of trading today, this morning after the market opened, it's trading around $10 a share. So it really went down significantly, around 51%. But if you bought really in the 2023, probably the fall period of 2023, you'd be up on the stock 57%. So it's all about really understanding a business, seeing when a stock is oversold, and then buying it at the right time. So that's interesting to see that depending on when you bought ZIM, you'd either be at a pretty good gain or at a very big loss. Looking at the earnings that ZIM provided, I wanted to point out a few things. Overall, the press release was that they had a major loss in 2023, but a lot of it was not a cash loss. Two things that I look at is depreciation. Again, they bought their ships. Depreciation is a non-cash item. It just happens. So we had $1.4 billion of depreciation expense on those ships. And then they had an impairment on assets of $2 billion. When you really add back those non-cash items, you really would have had a gross profit. Now, if we look at the statement of cash flows, you could see that the company actually from operations generated over $1 billion of cash from operations, and they didn't have a whole lot of capital to need to put back into the business. So overall, the company is producing really good free cash flow, which was one of the main inputs into my valuation. I'm going to value ZIM by taking their cash flows, making a forecast of their cash flows, and then getting a net present value on those cash flows that I expect. And for 2023, as mentioned, ZIM had positive free cash flow of $919 million. I'm not going to grow those cash flows for the first 4 years, but then grow it modestly in year 4. And then long-term growth at 2% for all periods after year 4. Terminal value is represented here, and there's a lot of terminal value for this company. Again, I believe that shipping is here to stay. It's a global economy. We move goods from one country to another, and over water is a very efficient way to move freight. I'm going to take all those free cash flows and discount them by a very high weighted average cost of capital, 14%, to get to a net present value of all those cash flows of $6.8 billion. I'm going to add the cash on the balance sheet and take away the debt and capital leases for the company to get to an equity value of 3.6 billion. The market cap on ZIM is only 1.4 billion. So there's a very big discount potential for ZIM. I believe that the company is going to be in business for the next 10, 20 years. So I believe the company will have very good years and it'll have some bad years. 2023 officially is a bad year because it had a loss. But again, they generated free cash flow. And if they continue to generate free cash flow and paying dividends, this is just going to be a good, valuable stock in my portfolio. But getting the right price on my acquisition is going to be the key to making ZIM a winning stock in my portfolio. So let me scorecard ZIM and decide whether I should buy more shares, hold, or sell my shares. First is the company. Do I want to own an ocean freight company? Do I like the industry? What about their management team? So overall, the answer is yes to all three. Again, I believe that we're a global economy. We move goods from one continent to another, and using ocean freight is the most efficient way of doing so. The balance sheet is right at 3 times EBITDA. Debt is right at 3 times EBITDA, and that includes their capital leases. So the balance sheet's in good shape, and they continue to generate free cash flow. ZIM offers a fantastic discount. So I'm going to be buying more shares in ZIM. I have a small to medium-sized position on ZIM in my growth portfolio. I'm going to be adding shares to that part of my portfolio. I'd love to hear what you think of ZIM. It certainly is a company that is either going to be a home run or just a total loser stock. And I'd love to hear what you think is going to happen. Thank you for watching the video. I hope you found it interesting.